Thanks for having us. Excited to be here.
Excited to be here.
Hong, when we were getting ready, Hong, he wanted to mic up specifically, so he didn't want to hold one of these. We thought maybe there's going to be physical activity involved, but no.
They said I should mic up, so yeah.
All right. Well, super excited to be here. I'm Dennis Bree. I head institutional growth for Morpho, and then we have Hong Kim, CTO and co-founder for Bitwise. Super excited to have this conversation. I have known Bitwise for a long time. You guys have got an impressive 8-year track record. I think you've got 1.5 billion in assets and something close to over
15 billion.
50 million.
Yeah,
50 million assets. I undersell you. And across 40 different crypto products. So tell us a bit about Bitwise and what you're excited about this year.
Yeah. Maybe also just for the crowd, I'm the CTO of Bitwise, so I don't do this type of public speaking often, so it might be a little bit more raw. But hopefully that's more interesting to you. And yeah, also would love to just take the conversation in any direction that's kind of helpful for the audience and more engaging. I know these things can be a little bit dry. So
this is going to be fun. We're going to make
this
fun.
let's just try to, I'll try to keep the responses short so that you can kind of, it's only 15 minutes here. Bitwise, 8 years, about 200 people, 15 million in assets. Mostly people know us for ETF products, but we have SMAs, private funds, derivative products, have staking. Now we're getting into vaults, which is the conversation here. Yeah, we're a specialist asset manager. We're trying to be the asset management firm that people can trust. And Vault is on-chain asset management. So we're here.
So
and that's what I'm excited about for this year. Yeah.
That's what you're excited about for this year. Good. Tell me about the decision to move into vault curation. How is a firm dealing with mostly family offices, RIAs, traditional institutions? What kind of led you to that decision?
Absolutely. So Hunter and I started the business in 2016, so this is year 10 of building Bitwise for us. And it's not like in the past 9 years we didn't want to offer products directly in DeFi. But we're an onshore regulated firm in the United States, and to be honest, it was a pretty tough environment to be engaging, building products directly in DeFi. And this is finally the year that we can do that from a regulatory environment perspective. So I think one reason of the why now is that. And also to answer your question about kind of I do think that there is, at the beginning, not all of our kind of TradFi customers will be like the RIAs, family offices, the people that have total connectivity to brokerage accounts and all of that, like comfort there is not really the immediate target audience of Vault, I think. Right. Basically, the reason that we thought this is something worth doing, I mean, the entire TVL and Morpho maybe on the Vault side is 2-3 billion or so. Bitwise has more AUM than that. Right? So in some ways, it's not the immediate opportunity that makes it compelling for us to be investing so much into vaults. It's the future. And the reason the future is very clear is because of stablecoin growth. So like people talk about on-chain asset management, but really a big part of it is stablecoin asset management. Ultimately, when dollars transform into an on-chain wrapper for one reason or another, whether it's utility or cost or efficiency, stablecoins are coming online, all coming on chain. Right. And to serve them, if you want to serve products, investment products, asset management products for stablecoins, then you need to meet them where they are. And that is on chain, and that's basically Vault. So because we believe in the stablecoin super cycle, it's very obvious that this is where we should be.
So were you front running the opportunity, or were you having active demand from your customers around on-chain finance, Vault curation?
Yeah, so we have a wide range of customers from the very traditional side. For example, we have like 10 or 20 banks or broker-dealers in the United States that we serve kind of their traditional customers on. And this is your financial advisors, institutions, endowments, like the whole spectrum there. But also we have staking products. We stake about something close to maybe 4 or 5 billion of assets. And on that side, we have exchanges, wallets, fintechs, public companies as clients as well. And I think from that side, we saw demand around earned products, basically, kind of stablecoin yield products from mid last year, pretty clearly, and we've been figuring out if we can offer this product from our company. But I think that's where basically everyone that is thinking about integrating stablecoins in a serious way into their platform, whether that's fintechs or et cetera, or the ones that already have stablecoin balances with the customers, is really where the immediate need is. Like, I don't think a Morgan Stanley advisor is suddenly really looking for on-chain vaults, because their needs are very well served. Their clients are, yeah. So I think over time, as the space matures, there will be even something for that crowd. In the same way that stablecoins were initially developed for kind of on-ramp, off-ramp to crypto exchanges for trading, right? And then those rails got developed, and then all the AMMs or lending protocols, even more, all were built for DeFi use cases. And then now it's porting into more TradFi use cases as well. I think vaults will likely go in the same way as well. It will first be dog-fooded or used internally for all the kind of natively on-chain or kind of stablecoin asset management, and then it will evolve to a point that it will just be more efficient and easier to use for the traditional use cases as well. But I think that's not where we will go first.
It is interesting. I mean, one of the things that I was surprised about is how quickly institutions are moving towards vaults, right? Lots of questions around regulatory, compliance, legal, security as they get comfortable with it. So walk me through, like, how's curation?
I think institutions moving to vaults, though, is like the institutions wanting to serve the crypto user base, the stablecoin user base, right, the on-chain user base. Okay. So I think it is more of a business expansion move for them rather than a vehicle to more efficiently serve their existing user base. I think that will come, and that is part of the kind of 5 to 10 year time horizon plan. So I think those things will happen, but it's not something of now. And if you think about it, like until the full kind of backbone of a lot of like securities, for example, are a little bit harder to move around on chain in a permissionless kind of manner. There's still a lot of things to work through, KYC or like rules. Like it's yeah. So for the entirety of TradFi's like workflow to all wholesale move over and say that this is more frictionless and efficient, I think that is, I mean, we'll get there. I'm very optimistic that we will. And like Genzer is saying that we'll bring all of finance on chain in its time. So we'll see how far we get in that moonshot. Right. But like there is a lot that we need to get through as well.
Okay, I have lots of questions on that. Tell me about how's curation going? What does the team look like internally that manages that? Like, I'm super curious on how you're thinking about risk management. This is a relatively new space for most of your customer base. As you say, they're not there yet. But as they start thinking about that, what have you set up as a team today to do curation? And tell me a bit more about your risk management strategies on a high level.
Yes, we have a portfolio manager who did kind of 17 years of credit and TradFi side of things, and then recent years in DeFi. His name is Jonathan Mann, who leads the team with associate portfolio managers and a few quants and engineers. It's kind of a more like systematic type strategy team, and a little bit different from the more kind of, if you think about our Bitcoin ETF or Solana staking ETF, I mean, there's a little bit more components, but those are more passive investment products. And these require more systematic allocations and more real-time, block by block assessment and evaluation of allocation, or kind of pulling back liquidity, assessing LTVs. All those things need to happen in a more programmatic and real-time way. So it's a different type of team and engineering effort that is required. part of what makes it a bit more appropriate for Bitwise is actually Hunter, my co-founder and CEO, and I both come from a more technology background. Hunter was a was a product manager at Facebook before this, and I was a software engineer, studied computer science. We've built an asset management business over time, and the rest of our executive team comes from the TradFi side, and we've kind of learned what that looks like over the past 10 years. But building technology or kind of more systematic kind of approaches to directly kind of on-chain asset management is a very exciting journey, and it's something that we've been on for the past year or so. Yeah, does that answer your question?
Yeah, it does. So one of the things I'm curious about is I talk to banks, fintechs, about whether it's about an earn program or whether it's about something else. What do you think are the things that need to happen from a regulatory perspective to really start to act as a catalyst for your RIAs, family offices, that side of the business to start looking at on-chain finance? What are the things, if we fast forward maybe 12 months and we have a great year, what are the things that need to be in place for them to turn around to you and say, hey, we're interested in on-chain finance, we're interested in this program, we're interested in a yield program or this use case? Talk to us.
Yeah, if we're talking about like 12 to 24 month timelines, the likely reality is that one approach that we're taking probably will be out in the market sometime in the next few months is just wrapping vaults in ETF wrappers, and then bringing that to market. Because that's what Bitwise has learned a lot is that in financial products, like any other products, like even like software products, what you know is that friction matters a lot. And if you bring down friction, then usage grows meaningfully. That's the lesson of Bitcoin ETFs. People thought, there's a million ways you can buy Bitcoin. You can buy it on PayPal, you can buy it on Coinbase, and you've had that for 10 years. Why would a Bitcoin ETF have any attraction, right? But turns out there's been $60 billion worth of attraction. Because ultimately people, you're just not going to open up another Coinbase account for 2% of your clients' assets when you have 50 clients that you need to manage, and a lot of public market. So I think the first likely bridges the most popular bridges I think will be built that way, where people don't even have to necessarily learn a whole new thing. If you for example, package like vaults into ETF wrappers and make it available in brokerage accounts. That's like one way that if I practically thought about how would our the average financial advisor actually allocate into a DeFi yield generating strategy, I think that type of approach would be maybe
So you're saying abstracting friction, moving that up.
Yeah.
Okay.
Both directions.
Yeah.
Because that's also how stablecoin stuff is getting adopted as well, right? Ramp just this week announced that they're integrating stablecoins into their product. It's not that they're training their entire customer base about how to use stablecoins. It's just they're making it seamless into the back end. Yeah. I think that will likely be similar in the TradFi adoption direction as well. Like the same thing that they know how to do, engage in buying an ETF or et cetera, and then in the back end there's either the yield generation or efficiency, et cetera. I think that's more likely how adoption actually happens.
Okay. Maybe in the last 30 seconds, if there was one thing that you would like to see changed in the vault architecture that you're experiencing today, what would that be?
I think we're at a phase where there's too many vault protocols. I think the meme where everyone is there's too many protocols, and then the result of that is that they come up with another protocol to solve the problem of too many protocols. I think Morpho is great because it's very focused and simple around just lending markets, and everything is on chain in that kind of construct and primitive, and it's tight and it's opinionated. I like that about Morpho's vault. Of course, it doesn't allow direct allocation into RWAs. It doesn't allow leverage in any way. And these are things that people like to do in different contexts. So then I think there's now kind of a million flowers blooming. Every curator has their vault protocol. Every chain, it's just kind of,
right.
Yeah. And I think there will be a phase where we consolidate into standards and a clarity of a few. I'm more so looking for that. Yeah. Ultimately, the things that you're trying to do is a straightforward set of things.
Right.
So I don't think we're at a lack of like expressiveness. I think more so the market needs a little bit more like these are the things that are tried and true and are safe, and we know the boundaries of them, and everyone has audited them. The compliance and risk teams have evaluated them. I think that is actually what's causing a little bit more difficulty in the customer conversations or product development conversations.
Yeah, makes sense. Thank you for this conversation. It's been fun. Thanks all.